Welcome back. 100 points lower now on the index, taking the market conversation forward with Jyotivardhan Jaipuria from Valentis Advisors. Jyoti, good morning. Thank you for joining in. Festive greetings to you, your family and your team as well. I'm sure you would be very impressed with what you just heard from our market experts. But going into the next Samvat, what is your advice for investors, especially because of the fact that the last Samvat has been a forgettable one, if you could call it that, considering the lack of returns?
Yeah, so like a year ago, we said that the market is like going to have a largely time correction and some price correction. We've seen a classic time correction. So I guess the index is more or less flat in the last 1 year. The small and mid caps have given a negative return. So going forward, I think we'll still have a more flattish sort of market, but with a positive bias. So I think probably if you look a year down the road, we'll probably be up, maybe low double digit from here or high single digits. So when the 8 to 12% mark, we'll get a positive return coming through. So I think, that's the good news, that a lot of the time correction has happened. We've not got a return. And next year, the return will be good. At the same time, it won't be a spectacular return, which we saw, post-COVID, which people got used to a bit.
I think that's become the problem, right? That everyone's so used to those post-COVID returns that they expect it to happen every year, but that's not the reality, right? Jyotivardhan, in that case, you said time correction has already happened. Any specific sectors or stocks that you think are back to the reasonable valuations and we could see an uptick from here on?
Yes, one would be the banking sector, because, if you see the banks, even the September quarter won't be good. You have, NIMs under pressure. A lot of this has to do with the lead lag effect that, whenever rates start to get cut, then you see, your deposit rates taking a long time to get cut, your lending rates cut easily. So, the first quarter for most banks will be a negative quarter, a negative first half, but the second half should start seeing a recovery, and next year, we should see earnings go back to normal. Valuations here are reasonable. In fact, it's one of the few sectors which trades less than a 10-year average valuation. So most sectors, if you see today, if you take a 10-year average valuation and look at where they are today, most of them at a premium to 10-year averages. The market's also at a premium to 10-year averages. But banks are one sector where they're trading at a discount to the 10-year averages.
Jyoti, what do you make of the rise in gold prices? The way the prices have moved, both gold and silver, to zero it down, your gold financiers in that case, do you believe that this quarter or the upcoming quarter as well could be a fairly decent one for these companies?
Yeah, it will be a decent one for these companies simply because, their collateral value has gone up. So the key now is whether, gold continues to do very well next year. Because, after any asset class which goes up 60, 70% in a year, then there's a period where it tends to cool off and consolidate. And so that is probably where one is looking at. But otherwise, the gold finances will have a good quarter or two going forward also. They've done well in the last, 2 quarters, as we know.
Okay. Just important flashes at the bottom of your screen. While we are talking about gold and silver doing really well, gold and silver futures have fallen from the highs of the day. So, of course, that is something which is expected as well. But the biggest question still remains whether these dips are to be bought or, this is a pause on the rally that we are seeing. But that we'll keep tracking. For now, if you look at the ETFs, the gold ETFs, they are still higher. And at a point in time, we did see silver ETFs. They were trading at a premium to physical price of silver as well, and that's the reason a lot of mutual funds, they stopped subscription to their ETFs. Kotak Mahindra, Kotak AMC, we had ICICI, all of them doing that as well. For now, again, these are doing really well, all these ETFs, 7.5% higher on Grow Silver ETF. Nippon India is also seeing gains of around 5.5%. But Jyotivardhan, you spoke about banking is the one which could see an uptick, and that is one sector that will benefit. Anything else that comes to your mind? For instance, new listings that we have, LG already a 50% premium there. In that entire space, do you think there is something which stands out in general?
So, in general, the consumer sector looks good, especially the discretionary part. We don't like the consumer staples even now, but just given the GST cut which has come in and the fact that, this year there's a big income tax debate which people have got. So there's like roughly a 1 lakh crore debate which you got. So, that whole consumer durable space is one space which will benefit in terms of, demand picking up. So it would be probably consumers, it could be the autos, but it's a combination of these where people will spend some of the income. My view is like, people will, so there are two ways people always think of is the entry car which will benefit. But probably what I am sensing is a lot of people may straight away want to go a little higher than the entry car into a more premium segment. And same way, in the consumer durables also, because now prices have become cheaper, you may find that some of the premium brands are doing better than, some of the just entry level brands. I think, that's what we are seeing across the board where people are wanting to get into premium stuff very, very quickly.
Jyoti, pleasure having you as always. Thank you so much for sparing time and joining us, and festive greetings to you once again. Take a short break. More on the markets on the other side. Stay tuned.